KKHT wants you to meet three of the classiest guys in real estate.
I am Chris Kelso, the maestro of mortgage.
I am Rob Cook, the godfather of real estate.
And I'm Joe Orsack, the king of credit swing. And together, we're the Real Estate Rat Pack. Much like us, real estate right now is smoking hot. So whether it's buying, selling, or owning, you need to check out the Real Estate Rat Pack.
They're here to take your calls and answer your questions live. Call now, 1-800-808-5548. And now, the Real Estate Rat Pack!
Good morning, good morning!
Good morning!
Wow.
Now, see, that's the way. You see, we have one of our guests goes right into it with us.
Shy, retiring Cindy Whiteside.
That is correct.
It's because you make me feel so welcome here. I just want to be a part of each and every.
You are a part
And
of it.
you're
Well, we
you're
practiced
always
that on the
welcome
limo
here.
ride over here. So.
Yes. And that reminds me, we probably need to put a new plug out to our
We do.
new sponsor.
The Rat Pack is rolling in style now. We have a nice stretch limo to carry us around from Dimensions by Dan.
and
That is
they're taking
correct.
to an event next week.
That is correct, on the
So-
10th.
This coming Thursday, right?
And then you are going to
Yeah.
go get your tux, right?
I will have my tux on, and everything will be going.
Not the T-shirt.
Yeah. No, not the T-shirt, no.
T-shirt this time.
Yeah, even though I do have the T-shirt on right now, though.
There you go.
Oh,
Look at
yeah.
that. All of a sudden, Chris is stripping down in the studio. Just got PG up in here.
Exactly.
Yikes.
You know what's great is today we were talking about a subject matter that is absolutely hot. It's on everybody's mind. Everyone's talking about it. Everybody wants to talk about it. And that is appraisals. And Rob, we've
Yes.
got some great guests. We have three really good guests in the studio.
And people I've known for a good while. Jeff Hayes is, he's been serving on our MLS committee for like 20 out of the last 25 years.
Wow.
He's the one that goes through those analytics we get from Texas A&M. He knows his stuff. And we got Ray Holtzapple, who I've probably known at least 12, 15 years. He is an appointee from the city of Houston to the Harris County Appraisal District. And, of course, the vivacious Cindy Whiteside, who is with Berkshire Hathaway Home Services,
Vivacious.
Anderson Properties.
This word was brought to you by the Houston Public Library.
So
We have to check that back in on Tuesday.
And, Cindy's kind of here because she had an appraisal issue this last week that actually was pretty large.
I think if anyone's in the business, you're going to have an appraisal issue.
Yeah, I don't
once
know
in
of
a while.
anyone who is actually doing business who hadn't had one in the last 2 or 3 years. So anyway, Cindy, welcome to the show.
Thank you so much for having me. It's always so fun to be with you guys.
Yes, we do know how to have fun, don't
Yes,
we?
you do.
That's what we tried to, at least.
And so kind of describe, you had an occurrence and you had a really large disparity between what the house actually went under contract for and what the appraisal came in.
That's correct. What happened?
No specifics, please. We're here to protect the innocent.
There we go. Ding, ding, ding. What happened was we had an appraisal. We agreed upon a price, and then we got into the process and had the appraisal, and there was a very large discrepancy. Well, my clients, they make the final decision, and their choice is they look at these professionals to give them a good money market picture of what's going on in the area. And so when the appraisal came in so low, of course, it was very frustrating to them.
And one of the things when something like that happens, what are some of the options that exist? From a lender's perspective and from a buyer's perspective, I think a lot of people who are listening out there want to, because everyone goes through it. Everyone has, some type of issue. What are some of the options that exist at those points?
I think one of the things that first you calm down and say, hey, let's talk about this.
Step one.
Just to calm down.
Calm down.
Yeah, that's the first thing. But then the next thing is we have options, and because it would not appraise, the seller would want, of course, to try and work through this normally. Sometimes there are sellers who are a little more hard-headed than others, and so they say no.
Some are more armed.
Yeah. Take it or leave it, which was kind of the case that happened to us. And so, but what it does, it opens options for my clients who are the buyers.
Right.
And the buyers, because the house did not appraise at the mortgage amount that they need, that would open up an option for them to say, no, we do not want this house. But the other thing that I think probably in this crazy market, which right now things are flying off the shelves faster than we know what to do with, that they would come to some agreement. But it unfortunately did not happen in this case.
Yeah, one of the things, and I've had conversations with Rob about this all the time, and it's, because obviously being in the mortgage business, we see appraisal issues come up, right? Some of them fly right through. Other times, and at the end of the day, an appraiser is a third party opinion of value. It's a third-party opinion of value that a mortgage company has to use to determine, loan to value, qualification, etc. But the way the contracts are written up nowadays, there's two types. People get confused a lot of times. There is a financing option, right? And then the appraisal is actually separate now in the contracts.
As of 2011 that we changed it. It's credit approval for the buyer, and you have so many days that's negotiated as to when that approval is.
Right.
But then there's a little line in there that says must meet underwriter's guidelines. And that's the part when it doesn't appraise, it's no longer meeting the underwriter's guidelines, and therefore you can actually terminate a contract, the day before if that's when you got the appraisal.
Right.
And literally that's what happened with us.
Right.
There was just a very short time that we were going to close. We had a couple of issues left before we closed. And when the appraisal came in, it opened up that door for them and my clients, because the appraiser is the professional. And so you have to really, really figure it out and say, hey, do I want to accept what he's saying or do I want to go out on my own?
No, and I would absolutely agree right there. And a lot of times, as you mentioned, it's a matter of also, and this goes out to all sides, is remember, in today's market, it's all about being open to negotiation. I'm not saying that all appraisals are perfect, and I would mention even the appraiser would say, because sometimes there's comps that's not available out there.
Right.
And sometimes there are homes that might be valued at more if there are available comps.
There are basically four options when you get to this point. Basically, you can come up with additional cash. In the case of Cindy's deal, it was a $50,000 disparity. So it's not many people are going to want to come up with $50,000 extra.
That's a big amount.
And then the second one is, of course, they can terminate the contract. Third one is that the seller can lower the price. And the fourth one is maybe they can negotiate and split the difference. They'll come up with, maybe they could have come up with $25,000 extra, and the seller came down $25,000. I mean, those are your basically your four options. Panicking is not one of the options.
Yeah, panicking is definitely not one of them. And one of the options we also have is we actually have a caller wanting to ask about a low appraisal, by the way.
Okay.
So we have Joe on the line. Joe, how are you doing?
Good. How are y'all?
Doing very well, thank you. I hear you got a question about an appraisal.
Yeah, I was trying to sell my house, and I had my house appraised, and it came in low, too. So I was wondering, what can I do to raise my appraisal? Is there anything I can do?
That's a good question, maybe for Cindy and for Jeff, maybe to task. Cindy, maybe his question is he has a home that he's selling, came in low on the appraised value, and wanted to know if there's anything he could do to possibly raise that.
And Jeff, you might want to go ahead and take that.
That is correct.
I think the options are pretty limited in that the appraiser is really working for the lender, and so they are. It's really a lender-driven problem in terms of the guidelines and the underwriting and so forth and so on. And I think that you can appeal from a standpoint of providing more information. If the appraiser is open-minded and has the time to spend on it, they may be able to consider the other information. I think one of the large issues now is that a lot of the appraisals for mortgage lending purposes are done by appraisal management companies, and they bring in appraisers that are good people in general, but they are paid a very low fee, and their time frame is very short, and that tends to limit their ability to spend time on the issue. I mean, ultimately, you can complain to the state if there's legitimate discrepancies in the appraisal as far as facts or other issues that might have had a problem. So it's a challenge, though, and in my experience, most appraisers really will not even listen to anything else, and you can provide them a lot of information, and they'll just say, I'm right.
You're not one of those, are you, Jeff?
Yeah. Sounds like politicians.
So how about from you, Cindy? Any ideas maybe other than what Jeff said?
I think one of the things that you can do is go and look at every good realtor will provide you with what I call mine a hate sheet, because you hate me when I give it to you, you love me when you sell your house for full price. And go through and make sure that your house is sound. And I think the best rule of thumb is, would you want to buy your house from you?
Right. Yeah, that's a good way of putting it right there. Joe, does that answer some of your questions right there?
Yeah, well, yeah, not really what I wanted to hear, but yeah.
Yeah,
we get that a lot.
Anytime an appraisal comes in low, trust me, it's not anything anybody wants to hear. I can tell you from a lender's perspective, because we do appraisals all the time, and we get appraisals that come in high, we get appraisals that come in low, we get appraisals that come in right on. And typically, as everyone's mentioning right here, the very first thing is number one, an appraisal is based upon comparable market or comparable homes in the vicinity, right? And so a lot of times, that's the number one factor. And Jeff wants to actually chime in now on this one. Hold on.
I think one of the big issues is that we're in a market right now that we really haven't seen since the late 70s, early 80s, where the prices are moving up at a rapid pace, and maybe 1% a month, maybe 2% a month. And the appraisers, if they were really reflecting the market, they would be adjusting for the fact that the property that sold 6 months ago would sell for 6% more. But if they make that adjustment, then they're going to have to spend some time validating it and answering underwriters' questions and so forth. And on the other end of the thing, from the lender's standpoint, there's so much liability if the appraisal is the problem down the road. And there's some large lawsuits right now between the Justice Department and the big banks where they're asking for $17 billion or $23 billion due to what they call defective appraisals. So everybody's kind of gun shy from that standpoint. And so it creates a real dilemma in the market, and that they're not really reflecting it. I would say if you're in a neighborhood that is definitely appreciating that houses are flying off the shelf, and that appraisal says that the normal marketing time is 90 to 120 days, that the market's in balance, and that there's the trend in prices is stable, then that will tell you right there that they're not reflecting the market.
What can they do about that then? Is there if they receive that kind of appraisal, then how do they handle that?
If they really have good information that the appraisal was not done properly and it wasn't credible, they can go to the Texas Real Estate Commission. The TALBC is the part that regulates the appraisers, and they can file a formal complaint.
Okay.
And the appraisal board will, or the appraisal commission will come out and ask to see the appraisals file, and they have a process where and that is something that I would encourage people to do, but you better have a good case, because if you don't, then it's really a waste of everybody's time.
Yeah, I would agree right there. And and Joe, one of the things that we see out there, again, is if you have a top home in your top of your neighborhood, there's two things we tell everybody. You can have the most precious home, right, and the top home in that neighborhood, but if everyone else around you doesn't have your quality of home, no matter what you do for it, you're not going to be able to get the value that you think you deserve in that.
There is a ceiling, and there's also those houses will bring him down.
That is correct.
And I would just wrap one other item that really people talk about. They want to know what the property's worth. They call an appraiser and they say, I want to know what it's worth. But worth is really in the eye of the beholder. And the seller thinks this, the buyer thinks this, the appraisal district thinks this, the insurance company thinks this. But what the appraiser is supposed to be doing is developing an opinion of the market value. And market value is something different than necessarily worth. And as an independent fee appraiser, I've handled a number of assignments in the last year where I didn't think the property was worth it, but I thought the market supported it. And so from that standpoint, the market value is higher. And it might be the reverse in another situation where I think, gosh, this is a great deal, but the market's only, it's only selling for this much. And so we're really talking about market value and not worth, because worth is an individual thing.
I was just going to say on that note that was a really good point that you brought up. But one thing that happened to me is I had listed up property that was the highest listed property in that price that had been in that subdivision for 2 years, because they had done so many upgrades on the house. We received 4 offers within the first 24 hours, but I wasn't sure if it was going to appraise or not. But when you have those kind of backups, Joe, that say, I have 4 offers that are full price or $20,000 more, that might help your arsenal. Right.
That is correct. Joe, we appreciate you calling. Any other questions or anything?
Well, just one other, since I've got all these experts online. If I went out and got it appraised myself, and that independent appraisal came in higher, would that affect anything?
Here's one of the things you're going to be up against on that is a lender cannot use a third party, cannot use an independent appraisal ordered by you. A lot of the rules that have come up in the appraisal industry nowadays say that we have to be independent, have to use, generally speaking, an AMC, internal AMC, external AMC, whatever it needs to be, but we cannot use an appraisal that you have ordered. We still have to order our own appraisal through our own services and our own relationships that we have in place.
And AMC is an appraisal management company.
And I would add one other thing that, as far as whoever engages the appraiser is the client, not the borrower, not the lender, not anybody, or the lender might be. But from a standpoint of if you get an appraisal, it's no way it's ever going to be used by that particular lender.
Joe, we are coming up against a break. We appreciate you calling in today, by the way.
Thank you all so much.
Likewise, thank you. For all those listening, we are talking appraisals. You can reach us at 800-808-5548. We're up against a break right now, but stay tuned. We'll be right back.
Arms around me, I get a fever that's so hard to bear. You give me fever.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we are back. Man, it's great to have a warning, let you know that you're actually back on air.
Yeah, we're certainly on a hot issue today, and we're just
Yes.
I think we ought to actually put it on the air, put the in between the show or in between the break show, because
Yes.
we're talking about same house, 3 different appraisals on that kind of. So let's kind of address what that's about. And so I'm going to turn to our appraiser Jeff and go, how does that happen?
Well, I think it happens a lot of different ways, and of course it is the opinion of value, whoever the appraiser is, and so it may be a matter, one of the things we talked about earlier before the show was just the geographic competency of the appraiser, and whether they're coming in from a different area and they've never handled any assignments in that area, and they may not be familiar with the nuances and with the differences. For instance, property inside the loop, the land tends to be a major component in the appraisal, but yet people are more concerned about having a house that is the same size, the same this and that, but they may have a lot size that's twice as big as another one, and at $100 a square foot, that may be more relevant than the difference in other factors.
Yeah, and again, it is a very subjective thing, is that people see it differently. But when somebody comes in from outside the area, and there's a high standard for appraisers that they should be competent in the area in which they work. When they bring someone in from outside an area, is that a reason to protest the appraisal? Or
it might be if they're not geographically competent, then that is a violation of their uniform standards. And so, but the matter is a matter of how to document that and so forth.
Yeah, because I know the appraisal management companies have gotten a lot better about getting the right appraisers in the areas, and they'll still do it on a rotation. And of course, we know that through Dodd-Frank is why we have this situation, is that they're trying to keep an arm's length between the lender and the appraiser. But when it first started, we had people coming in all the way from San Antonio to appraise in West University, and I remember, and you probably
and I think one of the problems is the appraisers that may be familiar with West University Place, they tend to spend more time, they tend to expect to be paid more, and they just do a different job than the guy coming in. And one of the things that's really been driven by the appraisal management companies is fast and cheap. And anytime you have fast and cheap, the appraisal may be fast and cheap, but it's really very expensive for the home seller, the realtors, the buyers, and everybody else involved. And so I know some lenders now that have to use appraisal management companies, they'll actually tell them, we will pay a better fee in order to have a better appraiser. Yeah. Now, a lot of the work we do is not through appraisal management companies. It's through the banks that have their own appraisal services group that are walled off from the other side of the bank. They may be doing portfolio lending and so forth. And they have a very good eye on the people that are familiar with the different areas that do the proper jobs, and that's who they're using. But that's not going to happen if you are forced into an appraisal management situation. And one of the worst cases that I know of is with the FHA, that once you get an appraisal, that's the one that's going to be used for 6 months.
Exactly.
And it has a horrible effect on the market.
And one of the things I was going to ask you, Jeff, is, maybe go into this a little bit. I have this question I ask all the time is, you're required to use like comparables within a certain vicinity of a general home. And I'm going to use an example. There was a townhome, or not townhome, a condominium the other day, in which it was a beautiful condominium, probably the nicest one, okay? Perfectly good comps within that condominium, within that building, that 20-story building, and yet it didn't make value, and the agent on the opposite side, on the listing side, was trying to convince us to use a different building, basically. So let us know. How do you look? Appraisals in general, you have to look within a certain vicinity, correct?
No, that's not true from a standpoint of if within a certain vicinity is where the market is. If you have a person shopping for a condominium, I don't know very many people, maybe in some of the elite buildings, that just shop in that building. They'll be shopping at 4 or 5 buildings within that market area. And so what the appraiser is really trying to do, or should be doing, is getting the comparable sales and so forth that are the best indications of value. And what you said is terms of being required to do something, that's not true necessarily, but that's what's happened from a standpoint of with the fast and cheap appraisal. the people don't have the time to really spend figuring out what's going on in the marketplace, to really look at the other buildings and what historically the differences between them have been and so forth. And so they just, they've got to get the report within 24 hours, or they're going to be getting emails and calls every 45 minutes from the management company, and they just throw up their hands and they finish the job and turn it in.
And that was my next thing is part of what we're seeing right now. The fact is that everything is having to be done so fast. We have, I can tell you on our side, we have get deals in, and then everyone wants, the very first thing to do is order the appraisal, get it in. How fast can you get it in within prior to the 10 days option period, et cetera, et cetera. And so we're forcing as a lender to make these appraisers do things faster because of the general market. Multiple offers are going out there. People want to see those numbers faster. They want to get things done faster. Is that part of the reason maybe of why we're seeing that faster, cheaper methodology?
Well, I think it is, and that's part of what I alluded to earlier, that it is in large part a lender-driven problem as far as the appraisals go. And one thing, I'm fortunate enough to have been in the business long enough that I don't have to take every job. And a lot of them we bid on through a RIMS or something like that, an online bidding thing, and it says how much and how long. And if I can't meet that time, or I don't want to meet that time, or I don't think the fee's okay, then I turn down the job. But there are a lot of people out there working that are independent, that work out of their house, and they have to get every job that comes in. And so that's one of the difficult things, that they're under a lot of pressure.
Well, and I can imagine. One of the things, as we say, is we're blessed to be in a market that is strong as it is. I've always been one of those that believe that the true value of a home is what a buyer and a seller are willing to pay.
And that is market value.
That to me is a market value associated with it. But as you were alluding to, Jeff, also is there's a lot of third parties. There's a lot of stuff going on right now with Freddie Mac and Fannie Mae and FHA and VA. And you're right. The pressures that are being put on the lenders from an accountability standpoint are absolutely tremendous.
Well, particularly when you think of the cases that are $23 billion, $17 billion, where the Justice Department is going after these banks. And the large part of what they're going after the banks for is that they had defective appraisals. And right now, Fannie Mae has said, we don't want any defective mortgages. And it's just a goal that's not attainable.
I would agree. This is a hot topic. We actually have another caller calling in right now. Carol is actually calling in. Carol, how you doing? Carl, sorry.
Hey, man. Good. No worries. I just had a quick question. So I'm a first-time home buyer, and I was wondering if the appraisal comes in low, where do I go from there? What are my options?
So you're a first-time home buyer, and if the appraisal comes in low, where do you go from there? What are some of his options?
That might be something that Cindy might want to address.
Right. Absolutely.
Hey, Carl. First of all, I hope you have a really great realtor who will help you through and make this a good experience for you, because your first time with your realtor is something that'll stunt you for life. But I think really you have 4 options, and Rob had talked about it earlier, Rob. One of the things that you can do is you can negotiate through and say, hey, let's meet in the middle. Let's work on that. And if the buyer and the seller come to an agreement where everybody feels it's good, go forward with that. One of the things that you'll have to do is you'll have to pay that out of pocket, because the mortgage, and correct me on, and help me with this, Chris, the mortgage will only pay for the amount that it's appraised at. And then how does he handle that afterwards?
Well, what happens is your loan to value is determined upon either the contract price or the appraised value, whichever one's less. So if you have a contract price, let's say of $100,000, and you have an appraised value of $95,000, okay, I have to use the lesser of those two values. So in this case, I'd have to calculate my 3.5%. Let's assume it's an FHA loan, a 3.5% off my $95,000, and then that $5,000 gap that exists is then the out-of-pocket expense above and beyond what we have to calculate it on. So it's really, from a mortgage perspective, we have to use it based upon that loan to value.
And addressing it with sellers, though, they get, like, I'm married to the money, I'm getting the net, I'm going to proceed with this. But the fact is, they never were going to net that amount of money, but they think they were. The fact is, when an appraisal comes in, typically that's probably what the most they're going to get in an open market is that amount, especially when it's FHA, as Jeff was talking about.
Stays down for 6 months.
It's that appraisal sticks with that house for 6 months on that appraisal. So it'd be incumbent on the seller to go ahead and take that deal, because that's the most they're going to get for that house.
I have a question based on what our caller was talking about. Is it ever in that situation? Is it ever in the owner of the house or I guess either way, one purchases it? Is it in their interest to hire or pay for another appraisal?
I wouldn't, one of the things is, I can tell you from a lender perspective, and this is good for Carl to know as well, is once we order an appraisal, okay, we get that appraisal back, I can't just turn around and say, hey, we got to get another appraisal because we don't like this one.
Right.
It's not part, as Jeff said, number one is anything that happens, number one, has to be noted on the appraisal to begin with. But also, there would have to be a really good reason. I mean, it's something that would be out of the ordinary for us to be able to request a second appraisal within a certain time frame and then be able to use those numbers just because we didn't like it. So a lot of times you have to go through the formal mechanism. I mean, we don't use an AMC like Jeff was saying. We have an internal company that we manage that process through. But even with them, I mean, we have to follow the rules associated with Dodd-Frank and the appraisal management rules and et cetera, et cetera. And you can't just order a new one because you didn't like something that was coming in. You still have to follow the rules and mechanisms available to you on those type of things.
Carl, I think also if you really love that house and it's a house that you want to be in for a while, sometimes the value will catch up with the house. And if you feel like that this is a good purchase for yourself, maybe don't let that stop you. Make sure that you work with your realtor, and your realtor will provide you with a comparable market analysis of the solds that have gone on in that area. And make sure you work really, really closely with that realtor. Be real honest and say, hey, I feel uncomfortable about this, or hey, I want this house. And trust her opinion, because more than likely she has a very good pulse on the market.
I would absolutely agree right there. And I know this also, Carl, is, one of the things, we see appraisals sometimes that are way off. They're 20% off, and we see other appraisals that are, 5% off. As Jeff was alluding to, on average, we've been having a growth here in the market, 1% on a monthly basis or 3% annualized, et cetera, et cetera. So a lot of times you take that into consideration, knowing where we're sort of growing, where things are going. Sometimes you have to negotiate, and you're within a 2 or 3% difference right there. You can generally, and again, I'm not an agent, so I don't want to misspeak on this, but you can generally make that up in a pretty fast basis due to the fact that the market's increasing quite a bit.
Okay.
All righty, Carl. Did that answer some of your questions?
That did perfectly.
Thanks a lot. We appreciate you calling as usual.
Hey, thanks, guys.
Thank you. And those are all really good questions out there. I mean, one of the things that we're seeing is that, everyone's out there, again, buying and selling, and a lot of good questions. But you know what else is coming up right now?
A break.
Another break as usual. So, we're going to take a break right now, but we are talking appraisals. Call us up at 800-808-5548. Stay tuned. We'll be right back.
Pearly white, just a jackknife, has old Maggie Heath, babe, and it keeps it out of sight.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we are back. And it's right now the hot seat really begins right here.
Yeah.
We're at the good one right now.
We have a longtime friend, and now the City of Houston appointee to the Harris County Appraisal District, Ray Holtzapple. Welcome, Ray.
How you doing, Ray?
I'm doing well. We'll have to see what happens.
Anyway, we had talked a lot on what. First of all, tell us what you do and what your responsibilities are.
Well, it's kind of interesting. The law is quite strict on this, and as an appointee, and we have 6 people on the board of directors, and they vary from the city of Houston to someone who represents all the other 32 cities in Harris County, and somebody who represents HISD, and somebody who represents all the other school districts. And it's one of those things where we have a very interesting board mix. But our requirements are, number one, is we get to hire or fire the chief appraiser. And that's kind of interesting because the stuff we have to go through intellectually, it's quite a challenge. And then we get to look at the budget, approve it, and work with the different taxing districts because they're the ones who actually fund the budget. Oh. And then the last thing we get to do is we get to recommend areas that need to be looked at for improvement and things like that. We do not get involved in the day-to-day operations of any appraisal district. The law restricts us to those 3 areas.
Now, you also brought on some very interesting data, it looks like. I mean, one of the things we were talking between the break, actually, was some of the interesting items that are going on in regards to, some statistics you've got right there, 2010 single-family areas and sort of the boom, recession, and the recovery between 2007 and 2014.
I don't know what show he thought he was coming on, but he's entirely too prepared.
Well, this can be kind of boring and cut and dry, but you wonder why your appraisal for your property goes up. One of the things that the Harris County Appraisal District Board of Directors have decided to do is reappraise every year properties. We're required by law to reappraise once every 3 years. So if you have a very stable environment and you do not see swings up or down like we've seen out of the financial crisis and now the uptick in property values, you don't have to do it more than once every 3 years. But we see things going down, so and we're usually a year behind because our information is last year's information, and it's all done as of January 1. So it's kind of a snapshot that you take at the beginning of the year, and you have to go back and look at things. And so we say, okay, let's make sure the market information we have is tracking the best we can so that people are not overpaying or underpaying their appraised value.
Now, have you been doing it on a year-to-year basis for how long now?
It's been year-to-year basis for 10 years at least.
Oh, wow. Okay.
Well, I always get this question from clients and customers is that, there's a house that's just like mine, 3 doors down, and I'm on the tax rolls for this amount, and they are on the tax rolls for that amount. Kind of explain that process, is how that occurs.
Well, again, it's the knowledge that the appraisal district has. They can look through satellite maps, mapping and everything else, the outside of a house, but they do not know what the inside of a house looks like. And the most important thing that you can do with working with your appraisal district is make sure they know the condition of the house. If you have a house that needs a lot of repairs, they don't know that. So when you go to protest, and we encourage people to protest their taxes if it's not right. We want people to come in, and you'll find that you get to do it through either online, through iFile and iProtest and things like that, or come in and talk to an appraiser. Or if you do not get satisfaction at that level, then you go before the Appraisal Review Board, an independent group of 3 people that do not work for the appraisal district. And if that doesn't work, then you can go ahead and go through arbitration, file a lawsuit. So there are many things that you can do, steps, very logical steps in order to do it. But as far as my house is different from the house next door, your condition of your house may be different. They may have done extensive remodeling. And those that pull permits, not everybody pulls a permit to do remodeling, gets tracked. Those permit information goes from the city or the county or wherever your permits are pulled to the appraisal district. That's factored in. You'll see extensive remodeling or partial remodeling as part of the information you'll see on your sheet, on your information. So if you have problems, and say you have a foundation issue, you have major repairs, you have old Chinese pipe in your house that's leaking all over the place, and you have to do you have windows that are rotting out.
Chinese drywall?
Chinese drywall. That's a good example, yeah.
Long story there.
Not maligning China, but I'm just saying there are these issues that are out there in the industry. So bring that along. Don't come to HCAD or any appraisal district wanting to complain about your house being overvalued without information. Come with the facts.
And that's actually what first thing I'll ask them, I said, have you ever protested your taxes? Well, no. And the other person probably did. That's why you get disparities. I mean, there's a lot of reasons for that, and I think it's exactly that. And sometimes I know they get a lot of the information on square footage from the builders when it's first built. Sometimes that information is erroneous. I mean, I've seen a lot of houses that are showing too large and a lot showing too small. So, if you don't have accurate information to begin with, the HCAD can't do anything with that.
Yeah, along those lines, I've worked with I'm a realtor by day, and one of my clients bought a house, and the survey was wrong. It had 2 houses on his lot. Okay, which really was interesting tax time when he got his first tax bill. And we went in and sat down on an informal, and they pulled up the the mapping system were able to look at it, see where the lot lines were, and corrected it very, very easily. But had they not protested, he would have been paying twice as much taxes as he should have been.
Right.
Yeah.
And and the other question I was going to ask is, I get this question probably this is the number one question I get, whether it's generally on the high side. We get a market analysis on, we get an appraisal and a fair market analysis, and it comes in, a good value, and yet compared to HCAD, it's a lot higher than what HCAD. So the first question is, are you going to report this to HCAD? Are you going to tell my appraisal district what this looks like? And y'all don't look at any of that data. Y'all don't look at the data. My personal appraisal, y'all don't consider when y'all consider your tax values.
What HCAD has available, and all CADs have available, is the MLS data.
Right.
And we get that through an independent third party, not directly from the realtors. Okay.
Right.
And those are the solds and the for sales. And, it's interesting that some people will actually put their house on the market at a low price before they come in to protest the taxes. I can't believe people
that never works,
do
does
that. It doesn't work because we go on HCAD, see how long it's been on. If it's been on 2 days, we know at a low price it's probably put on there just to skew the data one way or the other. So it's kind of interesting to see what information is and how some people have their eyes opened up when they come in. But it's interesting in the fact that we do not have disclosure in the state of Texas.
Right.
So there is no public disclosure of commercial, residential, or any property that's sold. And this is actually one of the challenges that the CADs have. So you have to go with market data that's available to you. Commercial is an issue because a lot of commercial transactions are never disclosed.
Right.
Now that helps developers in some respect, and developers may not wish to have that disclosed. But it's one of those things where if we had open market data, it would do better for everyone in the long run because we would be more equitable in our approach.
I bet you could get an argument from some people on that one.
I have had arguments with people on that. They get kind of heated sometimes.
Yeah, I can only imagine.
Yeah, especially these people in the office buildings and things like that. They know their appraisal's way too low.
This is Jeff Hayes again. I have a question as far as, I don't know if they're myths or realities, but I think a lot of people, and I've heard this from a number of people, that the appraisers for central appraisal districts have somewhat of a rational behavior in that if they want to keep their job, if they want a pay raise, then they got to get the values up. I've even heard people that have worked for HCAD saying, alleging that in meetings they'll talk about, if you want to get a pay raise, we've got to get the values up. And when the appraisal districts were set up, they were really set up to be an independent determiner of the appraisal value because we had the school districts and the counties and the cities and everybody else. How do you combat that sort of natural tendency that they know that if there are more taxes coming in, there's a better chance that they'll get a raise?
Well, number one is the CADs do not worry about taxes. That is not their job. Their job is to focus solely on market value of a property in today's conditions.
But for the appraiser for HCAD, they know that if there's more revenue, there's a better chance they get a pay raise. And so from that standpoint, I'm not saying that it happens, but I think there are people that think it happens. And that's one of the, they need to somehow keep that from being related, in my opinion, because there's a normal tendency to be higher in the value because there's a better chance that there'll be more money for me to get paid or they'll be able to keep my job.
Well, that's a myth. I'll say it's a myth because the board of directors controls the budget, and our budget is not set to tax rate. Our budget is set on what needs to be done to do the proper job. So we don't move it up or down depending on what the market's doing.
And I think it was really interesting what you said. Y'all are not a taxing authority.
We're not.
That is not what your job is. Your job is to set a market value associated with HCAD's directives that you have right there. But you're not bringing in the tax money. You operate on a separate budget. You operate on an independent budget right there, and that's independent of what the overall values ended up being. And in fact, one of the things we're going to go back to, we'd actually talked about. You've seen some big changes value-wise in HCAD, haven't you? As far as
very much, the market has swung, and we followed those.
And I can imagine.
Well, we have 1.7 million parcels We're the second or first largest taxing district in the United States.
Wow.
And we have 2 major cities that are not zoned, which really complicates the world.
Right.
So all things being said, it's a challenge.
I can imagine, the whole no zoning here in Houston, we all love it. At the same time, a lot of challenges
It's a
exist because of it.
Yeah, it is definitely a love-hate
It is
relationship.
definitely a love-hate. You know what else the love-hate is? All these breaks we have to take all the time.
Well, we got to pay for the show.
We got to pay for the show. We have to have our sponsors pay for it. So we are talking appraisals. Fun time here right now. But we're going to come up against a break. Stay tuned. We'll be right back.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we are back. Once again, the off-air show. Y'all are just all, chatty Cathy's over here.
Oh, we were talking about the
yeah.
politics of
The politics of appraisals and capping
real
and
estate
TAR
taxes.
and everybody else are out there.
Absolutely. So, but while we got Ray and we've got Jeff and Cindy here, I like to talk about trends because we talk about, we usually a technical term here on the Rat Pack, we call it smoking hot. So let's break that down. Ray, maybe you've got the stats right in front of you there. Talk about what's 2007 we started declining. In 2008 it was a bust. Talk about those trends.
Well, one of the things I'm going to leave behind for you guys to be able to put on your website is a 8-year map of Harris County showing the trends. In 2007, prior to the previous year, we had a 77% increase in property values. And then we declined, and in 2010, we only had a 12% increase in property values from year to year. And then it went down to 8%, went down to, in 2012, 9% increase, and the decrease there was 34%. A lot of things stayed unchanged, okay, no changes. 2013, it went to 30% increase year to year. And then this year, everybody knows what's happened to their taxing values. A 74% increase.
So is
in
your
properties.
phone like ringing off the wall?
Well, it's not. and let me clarify this. This is not a increase of your value. This is the number of properties that saw an increase.
We're moving on up.
Yeah, we certainly are.
To the east side.
Now,
We're loving our Texas properties. Let's get those property prices going up, fellas.
And this is good news, bad news. Basically, we got a very robust economy. Houston and Harris County is probably along with San Antonio, Austin, and Dallas, have seen the biggest changes. So one of the other statistics is kind of interesting. We're seeing most of the value increase, in properties over $150,000.
Interesting. Well, the market.
That's where the market is.
The 3 to 5s was moving the market for quite a while, and maybe Jeff, you can kind of address that. We had our first decrease in sales through the MLS, 7%. I guess in the month of April or May, I think, and so you had a different perspective of that, what that meant. So
I think if you break it down from a standpoint of the properties below 150,000, as we just spoke as being different market, that a year ago there were still a lot of REO or foreclosure sales going on. That market pretty much cleared out. And so a lot of those markets, those price ranges below 150 are down 40% or 30% or 45%. Once you get above 150, the top 75% of the sales total, there are price ranges like from 3 to 5 that are up 30 or 40%. There's 5 to 6 is up 25 or 30%. And so what really happened is that the bottom 25% of the sales total dragged down the top 75% of the market, so that in total the market was down 7% or so, which is the first time in about 3 years. But it depends upon the price range as far as what really happened and we're talking about the number of sales.
So we shouldn't look at that as an economic indicator that things are going to start slowing down.
Well, I think in the price ranges below 150, which is a lot of the city, or a lot of the county, that those markets still have a lot of issues.
Can I chime in here on the real estate
Absolutely.
end? I work for a lot of builders also in new construction, and I think one of the problems that has plagued my new construction builders is that they haven't been able to get a loan in the last few years, and so that tightened up the amount of new construction homes that were available. And sometimes I look at that stat and I think, is that stat correct, or is it an artificial stat because there's fewer houses on the market than there's ever been at this point in my life. And so sales are normally going to have to go down in my mind. As a realtor, I'm trying to get new listings constantly. I'm always looking for new listings.
Yes, please, out there, list your home today.
Well, and so because of that, there's fewer houses to sell. Do we have to take that in consideration, or am I just crazy
Well,
town?
I think scarcity is one
That's
of
two
the
different
things. Scarcity is the real thing that drives the prices up. But the statistics are difficult to follow because we get them on a monthly basis, so it's a window on that one day. But actually, between the first of the month and the end of the month, there are lots of houses coming on the market, and they already sell. If you go into a lot of market areas now and you ask the system, tell me everything that's come on the market in the last 7 days, you'll see that there's 50 or 60% of those houses that are already under contract. And so those listings are not out there. So there's really a lot of listings going on. They're just selling so fast that they don't show up in that one-day analysis.
And also have a lot of off-market things that we're not even seeing at all. So.
I just on a note of that, I appraised the house recently. It was like $900 and some thousand, and I went out there and I saw that it hadn't been marketed through the multiple listing service, and I asked the seller or the homeowner as far as did they put a sign out front like a for sale by owner or something, and I was told that I put it on Facebook.
Oh, wow.
And had like 5 offers in the first week.
Wow.
Yeah.
I think you're also seeing houses being put on the neighborhood newsletters. And that's just been a huge rush because in my subdivision, we're having generational buyers now. I'm having kids wanting to move back into this subdivision that I live in where they grew up. And I think it's a phenomenal success. I love it.
Yeah. Well, you know it's SG has that where they have a social group that puts together, and they're actually controlling part of that market.
The one caution I would give to that is that if you're going to put it on a newsletter or a certain city, if it's an exclusive situation where the rest of the public can't see the listings, there could be some issues there as far as
fair housing
and so forth, because the people outside of the community have no chance to see the properties for sale, and I could see that being a target down the road.
And when I talk about that, when I talk about pocket listings, when I'm doing classes and things like that, it says, well, not only could it be a fair housing issue, it's also you may not get the best value. Yeah. And there's already lawsuits in California about appraisals, is that, they were very happy with what they got for the house, but what they didn't realize, they could have gotten $200,000 more, like the house down the street that just sold. And so the lawsuit's already starting to happen because they didn't expose it to all of the market.
Right, and I think that's one thing that, as far as the Houston Multiple Listing Service, which has been a very, ahead of the curve system for many years, is that it has produced a very efficient market where there is so much information out there and there's so much knowledge. Mm-hmm. That's one reason these houses can sell in a week, is that the people know everything that's been going on. But when we get into a market where there's less and less information, then that becomes a much more inefficient market.
Moral of that story, make sure you're fully exposed.
And as we say on every show, hire a professional.
Hire a professional. That is correct. And that's what look what we have on our guest today. We have excellent individuals we bring on board to talk about, subject matters that mean something in the marketplace right now.
These are some of the most knowledgeable people in the industry sitting right in this room.
Yes, absolutely. I would absolutely agree right there.
Yes.
And one of the things also I'm going to ask Jeff, I'm going to ask you this question is, it was posted to me a bit earlier today, is what drives the difference between one appraiser getting something back in 2 days and the other appraiser taking 2 weeks? Is there a reason why appraisals should take so long or differentiate so long between one appraiser and another appraiser? I have my personal reasons why I answer that, but what's your opinion on something like that?
Well, I think it's kind of the same thing. If you have a builder that can build a house in 2 months and a builder that needs 6 months, it might end up being a little bit different house. And so from a standpoint, if someone is totally caught up and has no assignments, but the number of hours that really needs to go into an appraisal, it's just impossible to get it back in that time frame unless it's the only priority. And a lot of appraisers are working on 10 or 20 assignments at once. And so in order to do 20 assignments in 2 days, they could spend hardly any time on it. So it's really a matter, this is, again, a lender-driven thing. If you have to agree to get the appraisal back within 24 hours when you see the property and you take that assignment, then that's what you're into. But, again, I would not be one that would say I could get it in 2 days.
Yeah,
there's a lot of data out there.
We got a couple of minutes, and Jeff already has the mic. So what would you like people to take away from your visit today?
I think that we're in a market that we haven't seen for many years, and I think the public is probably ahead of a lot of the appraisal industry from a standpoint of what the property values are really doing in different neighborhoods. And one thing I would hope the appraisers would spend more time doing is looking, if they're saying a house has got 5 contracts and it's selling for $350,000, and you appraise the house for $300,000, look at the houses for sale and see if it's possible for the buyer to go buy that other house, because under the principle of substitution, nobody should pay more than they can find an equivalent house for less or a better house for the same price.
Ray, you got a thought to leave with?
Well, yeah. If you're going to come in to protest your taxes because you feel that the appraisal is not correct, bring the information. Make sure you have everything well documented, repair requests, pricing, problems with your house and things like that. So you will go ahead and get a fair hearing if you do your homework.
And one thing, anything 20 seconds or less for you want to leave with it?
One thing I'd say is use your professionals, trust them.
Use your professionals, trust them. A good saying we're going to leave off with today, actually, Amelia Earhart actually said the most difficult thing in the decision is to act. The rest is mere tenacity. Very appropriate for today's show, by the way. As usual.
Great show, folks.
Absolutely. As usual, we've got to be signing off. Until next time, we will talk to you soon.
And you've been listening to the Real Estate Rat Pack. The question is, who's Frank, who's Sammy, who's Dean, and who's the other guy?
Chris is Frank,
I'm
he's
Dean.
and I'm Sammy.
Yes, right. Yeah.
So tune in to the really big show every Saturday at 9 a.m. right here on 100.7 The Word, KKHT.